People with good credit want better credit. People with bad credit want good credit. But sometimes people with bad credit, we get desperate and do certain things, use certain tools that we shouldn't use to try to get better credit. We get a little too desperate. Let's not worry about getting better credit, better numbers. Let's just worry about better quality credit. Let's talk about it. Welcome to Level Up Finance, where we talk about money, mindset on the road to get millions. And on this episode, let's talk about self-lender and that shopping cart trick. How I think it's a no-no. The reason why I don't like self-lender and the shopping cart trick, they're not good quality products. It might help boost up your credit, but that's about it. I mean, if you have a self-lender or a shopping cart trick, yeah, you're gonna get a positive trade line. But at the end of the day, if you go to the bank and be like, yeah, I want a personal loan, I wanna do big boy things with my credit score, they're gonna look at your credit profile, look at the stupid self-lender account, be like, okay, you pay $25 a month. Okay, you got the shopping cart trick. He got only store cards. Yeah, your score is high, but you never really did anything. You're gonna be like, I want a $20,000 loan. They're gonna laugh at you. They're not gonna look at your credit profile, see your self-lender account, see you pay $12 a month or $25 a month, $48 a month, and be like, you know what? His credit profile is crazy. Bring the bricks trucks for him and loan him anything he wants. No, you're a grown man or a grown woman. They're gonna look at your credit profile and be like, this is a little kid profile. You pay about $60 a month in credit with stuff, and that's it. And then the self-lender account, let's talk about the self-lender account. With the self-lender account, that's why I don't like it. You're paying $25 and you gotta pay it for 24 months for you to get $520 for you to finally get your money back. You know, you go up to $35, you're still paying $24 months, and you're gonna get $724 back in 2 years. 2 years, right? You go to $48, all right, now you wait only a year. You pay $150, you only wait a year. And this is how much money you will have on your self-lender card or however it works, right? But then you're paying a $9 fee. Your interest rate is 15%. The APR is 15.91%. You got a finance charge, but your total amount is 18, you know? So boom, 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 you know, report to all three bureaus, FDIC insured. Can I pay off and close early? Yes. Is this a traditional loan? No. Can I spend the loan amount today? No. Is there a hard pull on your credit? No, right? Everything's okay kind of with that, right? But you're paying $150 for 12 months, and what else do self-lender have to offer? Nothing. I'm going to get to that in a little bit. But you just have the self-lender account. You pay a measly $25 or $35 or $48 or $150 a month. You're a grown adult, right? And you're trying to get big boy loans, do big boy things, get a house, you know, try to buy an asset or something. And the only thing they see is the stupid $25 monthly fee or monthly payment to a self-lender account, or you do the shopping cart trick. Right, the shopping cart trick. The stupid shopping cart trick. What is the shopping cart trick? The shopping cart trick is a strategy to get approved for a store credit card without a hard credit inquiry. Well, whatever, that's not important. Who should try the shopping cart trick? If you would like to try to get a store credit card without a hard pull, you can try the shopping cart trick. However, you should be prepared for the lender to perform a hard credit pull as part of the application process. Okay? Benefits of using the shopping cart trick. If the shopping cart trick works, you will be approved for a store credit card without a hard inquiry into your credit. Even if the shopping cart trick doesn't work exactly as advertised, filling your shopping cart with items trigger a pre-approval ad, and going through pre-approval process is still a good way to determine whether you're eligible for a store card. Okay. I mean, bottom line, the credit card shopping cart trick might not be a good way to get a store credit card without a hard pull on your credit. Although some people report that the shopping cart trick works for them, and other people do not have the same success. Shopping cart trick. You only can get a store card. Me, I'd rather a card that does everything. Work in any store, could go anywhere, even out of the country, and I can use my card. When I was starting my credit journey last year, I have one low quality card, and as soon as I do some of my big boy moves like refinance my house, pull out some lines of credit, I'm gonna dump it. Because I told myself I want to build a quality credit profile, because I want to do big boy moves. I don't want to get little $500 credit cards or $20 credit cards and can't pull lines of credit, and they laugh me out of the bank if I want to do some big boy stuff. Because that's exactly what we do with your shopping cart trick and your self lender. What I would do, what I'm doing right now is dealing with banks, real live banks. Navy Federal is my main bank. I got PenFed as a bank. I got Bank of America as a bank. I got Wells Fargo, Chase. I got a few banks, right? But Navy Federal by far is my main bank. I use that bank for everything. And my second one is Bank of America, and Wells Fargo, I got a business account there and stuff. But with a bank, you could get a secure card, a secured loan, and you build a relationship with that bank, all right? Like I said, self-lender is just some self-lending, positive trade line thing on your credit, and that's it. You can't go to self-lender for a personal loan. You can't go to self-lender for a mortgage, IRA, a savings account. You can't get lines of credit. You can't get a HELOC. You can't get a mortgage. You can't get all these different bank products that a bank offers. So why you want to build a relationship with self-lender? Well, self-lender only gonna get you so far. For example, let's look. PenFed, you get checking and savings, right? Money market certification, whatever, all these things, IRA, blah, 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 cool. You got credit cards, different type of credit cards, You get auto loan, You can get mortgage. You get a home equity loan. You can do all these different things, man. Personal loans, personal line of credit, student loan refinance, in-school student loans, so many different products. And the same thing with Navy Federal, my main bank. All these different products, man. All these different products, and you building a relationship. A relationship. I had a secure loan with Navy Federal. I never needed to get a secure card with them. I have a secure card with U.S. Bank, which is a real bank that got the same type of products, which I could level up with them. Like they trust in me now. You dealing with a bank, you paying on time all the time. You putting money in the account. They seeing money coming in the account. Like you not doing overdraft. You're not doing no funny business with them. Yes, they're gonna look out for you later on when you need them, especially credit unions. You got PenFed, you got Navy Federal, you got these other credit unions that you could possibly use. You're building a relationship, even the big banks. You're building a relationship if you using their products and you doing what you're supposed to do, all right? You're making them happy, they make you happy, one hand wash to the other. Self-lender, the shopping cart trick. I mean, I'm watching this YouTube lady, and she's basically saying, don't get secure loans and don't get secure cards. Look at my previous videos. I went from 520 to 680 on one of my Equifax because of a secure card, because of a secure loan. And I went from $500 limit with Navy Federal to I got a credit card for $7,200 with them. And with charge-offs, with a collection, because I built a relationship. With the shopping cart trick, you have to use store cards that you wouldn't even use in real life, like the RV shopping cart trick. Like, how many people got RVs? You basically buying things that's useless or you would never use, period, just to try to get a little extra credit. Use a real bank, build a real relationship, build a good quality credit profile. And let me show you the difference between a BS credit profile and a quality credit profile. For example, if you go to school, you have different classes that you take in school. One of them could be math, one of them could be gym. If a college recruiter come to your school and looking for qualified individual or smart people, he's not gonna look at your report card and be like, wow, you got an A in gym. Woo! Wow, that's powerful, man. Wow, you're doing great. We want to recruit you to our school, man. You don't have to pay a dime. Come to our school, you got an A in gym, but you got an F in math, F in social economics, and all these other things. You're failing in everything, but you got an A in like the easiest class. That's basically self-lender and the shopping cart trick. It's low quality wins, because when a bank look at your credit profile, it's like your report card. It's exactly like your report card. So you're a grown man or grown woman, and they're gonna look at your credit profile and they're gonna see self-lender, the shopping cart trick, see these low quality credit, trade lines, and you might have a 750 or 730. Your 730 or 750 not gonna be as powerful as my 680 or 650, because I'm building my credit profile with quality trade lines. All right? So you can have the A in gym, and I can have the A in everything else. All right? I can have the F in gym, but you could keep the A. Which one you rather have? You rather have the A in the higher quality classes. All right? So build your credit profile right, because you will win. All right? As long as you build that relationship with U.S. Bank, Navy Federal, Penn Fed, Chase, Bank of America, all these other banks, you're winning. Because self-lender is just a little trade line you can use that kind of rip you off, charge you $9, charge you 15% interest rate and all this. When I did my secure loan with Navy Federal, I only paid 2% interest on my loan. And I could tell them how long I want my loan. I wanted my loan for 6 months, and I told them I wanted my loan for 6 months. One day you probably want a mortgage, build that relationship. One day you probably want a personal loan, build that relationship. One day you want a personal line of credit, build that relationship. One day you might want a HELOC or a home equity loan or something, some product. Maybe one day you want an auto loan. Deal with a bank. Self-lender don't have none of that. And they rip you off. So anyways, I don't know. I seen this video online and it kind of got me a little tight. They bigging up self-lender. They're bigging up the shopping cart trick, when you could just build these relationships with these banks with a secure loan and it's a secure card. The more relationships you build with different banks, the better. Don't be scared to put your money up. Invest in yourself. You probably want to be all cheap and not really put no money up when it comes to like a secure card, a secure loan, but do at least 4 digits. That means at least $1,000, because we grown men and grown women here. We're not little kids. $100 limit on a loan or some type of little baby limit, and you're gonna do that to yourself. You basically building up a little baby profile. They're not gonna trust you. They're gonna trust me because I put thousands on my credit profile, so I'm gonna get that money back anyways. Hey, it hurts paying it up front, but I'm investing in myself because I plan on doing big boy things. You gotta have your why. Why are you doing this for? I have a why because I want to refinance. I want to get other mortgages. I want to get other properties. I want to get commercial properties. I want a HELOC. I want personal lines of credit. I want to get a loan anytime I want. without no questions because they know I know how to deal with money the right way. I got more of an uphill battle than a regular Joe Smo, because my credit profile before, I have a lot of charge-offs, I had collections, and I'm still in the mix of fixing everything, but I'm going to fix everything. I'm going to show you the whole process of me refinancing, buying other mortgages and everything like this, because this is level of finance. You start from level 1 and you work yourself up to the top floor, to the presidential suite, all right? So anyways, that's my little rant for today. Don't listen to these guys thinking a self-lender and a shopping cart trick is going to do the trick. Let me know one person that just had the shopping cart trick and the self-lender on their credit profile and was able to get a mortgage or able to get a $20,000 line of credit, a $30,000 loan, or do some big boy stuff. Or after the self-lender they was able to get a $10,000 credit card. Let me know one person with a self-lender and credit card trick on a on a credit profile that did that. And then I eat my words. But till then, no. Secured cards, secure loans, put your money up, man. Put your money up. Jay-Z have a quote, men gotta do men things for men's salary. Okay, women too, is the same thing. Men, women, you gotta do grown man stuff, grown woman stuff to get grown women and grown man results. And that's all I gotta say. All right, so anyways, if you like this, give me one of these, subscribe, catch you on the next one, all right? Level Up Finance.